Welcome back. It's time now to take a look at the top business stories. Shuruk explores ways to attract more investments into Sharjah. DP World to sell stake in Australian container services company. And Standard & Poor's cuts US credit outlook to negative. Let's look at the UAE stock markets first. Dubai's and Abu Dhabi's benchmarks headed in opposite directions today. The DFM General Index gained marginally by 0.1% to close the session at 1,654 points. Again, the utility sector showed the strongest upward momentum as Tabreed gained 2.9%. Dubai Islamic Bank rallied 2.3% and DU was up 0.6%. Emaar Properties, on the other hand, lost 0.6%, as did Dubai Investments, which fell 0.4%. Despite volumes picking up, shares of the DFM fell 2.1%. 392 million shares were traded, valued at 457 million dirhams. And over in the capital, the ADX General Index fell 0.2% to end the trading day at 2,703 points. Etisalat, for instance, fell by 0.5% as the company's first quarter net profit missed estimates. Qatar Telecom, or QTEL, even lost 5.7%. And Dana Gas dropped 1.4%. The real estate sector, on the other hand, was up. Alder Properties added 1.2% and RAK Properties surged 3.5%. The banking sector was mixed. Union National Bank was up 2.5% and National Bank of Fujairah soared 10%, while First Gulf Bank dropped 2.2%. 172 million shares were traded, valued at 251 million dirhams. And let's now take a look at the region's equity market. Stock trading in the GCC ended mainly lower today. And now to our top stories. The Sharjah Investment and Development Authority, Shuruk, has announced that it will start on an extensive study to explore ways of attracting investment projects into its capital, Al Daid. A meeting was held between the Al Daid Municipal Council's management and Al Shuruk delegation, as Sharjah is looking to attract more regional and international investments. They discussed topics related to tourism, employment and labour force, among others. Both parties paid tribute to His Highness Sheikh Sultan bin Mohammed Al Qasimi, member of the Supreme Council and ruler of Sharjah, for his support and contribution to the development of the emirate. DP World announced that it will sell its stake in container services company P&O Trans Australia for 408 million dirhams. This will be the port operator's second asset disposal in Australia, following the sale of its 75% stake in Port Holdings to the private equity company City Infrastructure Investors in December. DP World will sell the stake to Cube Logistics, and the deal is expected to be finalized by the end of April. DP World officials said both asset sales are part of the company's strategy to focus on investments in emerging markets, which have higher growth potential. The 2011 outlook for the GCC oil and gas industry is positive, according to research company Ernst & Young. There are many reasons to believe that the outlook for the sector is promising in the GCC. Mark Otti, managing partner at Ernst & Young, said, "There is potential upside to capital spending expectations based on higher cash flows from stronger oil prices." Ernst & Young also said that M&A activity in the oil and gas industry rebounded strongly in 2010. The total value of transactions announced globally reached $270 billion last year. And in our fast financial news, the Dubai government is developing a regulatory body for the utility sector to allow for private sector access. According to a local paper, the unit will be an independent body and will control and license establishments related to the power and water sector. Etisalat reported over 8 billion dirhams in revenues for the first quarter of 2011. That's an increase of 2% compared to the same period last year. Operating expenses, though, increased at a faster rate by 11%, which is why net profits fell more than expected to 1.8 billion dirhams, down 9% year-on-year. Etisalat stock fell 0.5% on the ADX today. The Dubai Financial Market General Index is the only GCC stock index in the positive territory this year. The DFM has posted a year-to-date rise of 1.4% as of today. Kuwait Stock Exchange, on the other hand, is down 8.3%. The Saudi Tadawul Index lost 1.3%, and Oman's benchmark dropped 5.3% since the beginning of the year. Experts account this to attractive valuations among UAE stocks, as well as the country's safe haven political environment. Dubai investors keen to expand into Brazil should focus on trade and consumer goods companies. They stand to benefit from the growing middle class in the South American nation, according to Hamad Bouamim, the Director General of the Dubai Chamber of Commerce and Industry. And after the break, we will run you through what's making the headlines in international business today.